Hey guys, this is Mr. Roxy coming at you from Palm Beach in Florida. It is Tuesday, it is May the 4th, and what we're going to talk a little bit about today um, is sort of that weighting of your portfolio, weight as in WEIGHT, weighting as not, which is different to waiting for your stocks to return a healthy return, which is WAIT. So when you look at the actual weighting of the equities in your portfolio, uh, one of the things that you want to do as you look to potentially open a position is say to yourself, like, how much of this particular equity do I want to hold? And then for how long, right? So effectively, if you're going to buy into something like Occidental Petroleum, are you day trading? Are you buying it for, because you hope it's going to go up after the next earnings report, which is coming up on May the 10th? Are you going to hold on to it until the end of the year, until this sort of coronavirus pandemic kind of goes away and it's no longer an issue, and then you'll just sell it and get out? Do you have a 3 to 5 year time frame? Are you 20 years old and you want to hold Occidental until you are 60 years old? So is your time frame 40 years? Because maybe if you buy Occidental today for 25 bucks, in 40 years from now it's probably trading at $5,000 a share. So it's very critical to kind of keep these things in mind as you look to potentially open a position for investment purposes. So we're going to talk a little bit about weighting. Let me just get myself out of the way here and get this thing going. And then for those of you who have been following my channel, you obviously know by now that I have a very, very weighted portfolio in terms of my energy and financials. In fact, just sort of off the top of my head, and I might skip one or two of them here as I think about it quickly, but in energy, I hold Occidental Petroleum, Total, I have Enbridge, I have Pembina, I have Energy Transfer. In financials, I have a few Canadian banks and financial institutions. So I have TD Bank, which is Toronto Dominion Bank, Bank of Nova Scotia, or Scotia Bank. I have Sun Life Financial. One of my largest positions in is Alliance Bernstein in the financial services industry. So you could say, like, why, Mr. Roxy, why did you get into these particular equities, and for how long do you want to hold them? So what I did here is I took a quick few snapshots. I'm going to go through these very quickly. If your time frame is one day, so if you're day trading, you never really know what to expect, right? Of course, you could get lucky, but you could also have a bad day. Now, this screenshot I took early this morning, and so basically this is a combination of yesterday's trades and futures overnight. Energy was down a little, just a smidge, and financials was down, 0.11. So you could say, if I'm day trading, I'm going to get into this. Maybe I get a little bounce today and I can take the profit. I did once sit next to a guy on the plane who said he's not very greedy. He just wants to make 1% per day. And I was thinking, like, wow, if you could do 1% per day for 200 days a year in terms of trading days, that wouldn't be too bad. How about 5 days? So if your time frame was 5 days, you could have returned, if you invested in the energy sector. You could, for instance, buy an ETF that covers the entire sector. You would have made 1.4% approximately over 5 days, and just a little bit on financials. What if your time frame was 1 month? Then you would have earned approximately 3% on financials, but you would have lost approximately 2% on energy. So you see where I'm going? It's kind of unpredictable, and you don't really know. So there's a very significant difference between investing, especially going long and investing for the longer term, and day trading, which is more of a gamble, if I may say so. How about 3 months? If you hold some of these stocks, financials and energy stocks that I just mentioned, including the ones that I have long in my portfolio, for 3 months, you would have been up about 10% on financials and almost 6% on energy. How about 6 months? Now energy rises to the top of the pack in terms of the sector performance, because it's up almost 45% over 6 months, and the financials are up 34%. So you can say, like, well, that looks a little bit better. And then how long have you been in this, Mr. Roxy? Well, I'm going to show you in a minute. So 1 year, you see the financials are up 60% and energy is up 24%. So it's just over a year ago when I actually opened my first position in Occidental Petroleum. Excuse me, it's about 18 months ago, because I actually acquired my Occidental stock just before they executed the trade on Anadarko. So terrible timing, I know, but that's why I'm showing you these particular slides. And here's the critical one, right? So why am I so heavily weighted in terms of finance and energy? It's because the majority of the financial stocks and energy stocks in my portfolio, I have already held for certainly more than 2 years, and in many cases 3 years or thereabouts. So when I got into these positions, these sectors were lagging. They were right at the bottom in terms of their performance. And you can see energy was the worst, negative 30%. Now, there's no way, if you are patient and just reasonably smart enough to throw darts at a board full of energy stocks, you probably could have picked one of many that was going to give you a good return over a period of time, like 3 years. So if you're patient, you can actually make really good money, because in this particular instance, energy went from negative 30 3 years ago to about plus 45 just 6 months ago. So that's a huge swing because it's more than 100%. A couple of quick news reports and news slides from today. So this was earlier today. We see WTI edging around the $65, $66 mark, and Brent getting close to $70 per barrel. That's pretty good for the drillers, and obviously we're about to see a number of large, including super majors, still report. And then if we look at the 3-year period, oh, I've already shown you that one, so let's skip that one. I'm going the wrong way. Are big oil's renewable investments paying off? So this is a little report that I saw just earlier today on oil.com. The world's largest oil companies reported solid earnings and strong cash flow generation for the first quarter, but all those profits had little to do with their pledges to boost investments in renewables and work for more low-carbon energy solutions. In fact, the main driver for higher earnings in Exxon's case was the recovery of oil prices during the first quarter of this year. How about this one? I covered Total just a little while ago when I talked a little bit about their earnings that they just released a few days ago. Total said that its adjusted net income of $3 billion for Q1 exceeded its earnings from the pre-crisis Q1 2019. Obviously, we know that, but take a look at this one. This sentence says, and the strategy to grow LNG and renewables. However, so in other words, they're basically saying our $3 billion for Q1 exceeded it thanks to higher oil and gas prices and the strategy to grow LNG and renewables. If we dive a little bit deeper, we see the EBITDA on its renewables business was just $148 million out of more than $7 billion total EBITDA. So absolutely, completely irrelevant and not material to their results at all. Anyway, that's Total and Exxon. Let's take a look at some of the others. Goldman Sachs says that oil demand should realize the biggest jump ever in just over 6 months. Now, I've said this before, and I'm going to say it again. Two of the largest oil companies on the planet are Goldman Sachs and Morgan Stanley. So don't be fooled when you see large super majors like Total and Exxon and Royal Dutch Shell and BP and Chevron, etc. And don't be fooled into thinking that those are the really, really big oil companies. Some of the largest oil companies don't even trade in oil. They are actually market makers like Goldman Sachs. You've always got to be cautious. Sometimes, if you're very brave, you could just take the other side of whatever Goldman Sachs is and take the other side of the trade. Anyway, Goldman Sachs is looking for the biggest jump ever in over 6 months due to higher demand for travel and acceleration of vaccinations in Europe. Okay, I'm pretty confident that the higher demand for travel is possibly going to have a role to play in this. The acceleration of vaccinations in Europe might mean that there are more people going out and about, and also more people perhaps returning to the office, going back to work. We'll have to see about that one. I'm not sure. Here where I live currently in Palm Beach in Florida, the majority of people, including some of my friends who have already been vaccinated with both shots, are still walking around with a mask on or otherwise staying at home. So it seems as if they're not overly confident in their vaccination, but I don't really have an opinion on that. Oil rising to $80 per barrel this summer, I think that's a gimme. That's an easy tee up. They wrote in their note that strong demand will require OPEC to put another 2 million barrels per day on the market in Q3. That's a possibility as the demand jumps up. In fact, I skipped this line over here in the middle. It says set to result in the biggest jump in oil demand ever, a 5.2 million barrel per day rise over the next 6 months, Goldman Sachs said in a note to clients. Fossil fuel sector is enjoying a real blowout season. Yeah, we've kind of seen that, right? So if you've been long and strong with me in the oil sector, you've probably enjoyed some of those same gains. 82% of companies that have reported have managed to surpass their revenue expectations. This is not 82% of all companies, this is 82% of the energy sector. The energy sector is beating earnings expectations by an average margin of 335%. Who knows what the upcoming earnings reports from Energy Transfer and Occidental Petroleum will show us, but that would be interesting. How about this one? Kinder Morgan so far reported the biggest positive earnings per share surprise among major energy companies. Earnings per share of $62 per share easily beat the analyst expectations of 23 cents. Now, I had some chats about analysts with a few people on the channel, and we kind of in agreement that they should be banned if they miss the expectations by more than 10%. In fact, in my opinion, analysts should be just banned outright. They serve no purpose. They just manipulate the market and interfere in terms of the average everyday market trades. Kinder Morgan's revenue of $5.2 billion very easily beat by $2.17 billion. So guys, that's a wrap for today. Let me know in the comments what you think about your weighting and your time frame. And as usual, if you like my content, please subscribe. Feel free to comment so we can get some chats going and we can share some information with one another. I sincerely appreciate the fact that you've been watching. But let me know sort of what you think in your portfolio, specific to energy or financials or anything else that interests you or intrigues you. Are you long and strong? What's your time frame? You're going to be in it for another year, another 6 months, another 3 years, 5 years, or whatever. I have said before that my time frame on Occidental Petroleum is approximately 3 years, maybe 3 to 5 years. But I said that a year ago, so I'm now down to 2 to 4 years. But let's see how we go. It'll be really interesting to see what they report next earnings report, which is coming up soon on May the 10th, which is now just 6 days away. In the meantime, this is Mr. Roxy saying thanks for watching. Take care, and I'll see you soon. Bye.